All right. Ooh, it's getting rowdy in here. It's like a party. Oh, hey. Alright, let's bring the music down, guys. Oh, 8 likes. Hey, that's what's up. Welcome, guys. Welcome to Tuesday's live stream. Just feels like a club in here. But due to the pessimism that's going around the markets, I feel like we're gonna have a little bit of dance music here, dubstep, and the good old oldies that I used to listen to long time ago. But yeah, guys, welcome in. Get seated, get situated. We'll be talking specifically about what you guys should be doing right now for the month of October to kind of protect yourself and your portfolios, well, yourself as in mentally and emotionally, and for your portfolios as we head into a potential pretty tame market correction. All right, so I'm not gonna say it's a market crash, but it's gonna be a possible tame correction, which we kind of need from a technical perspective. So let's bring the music down a little bit more. Let's make sure my audio is doing fine. Okay, perfect. So the first thing that I really want to go over is, oh, actually, let me before I begin here, let me make sure I let my Discord know that I'm live. All right. Okay, so if you guys read the description box down below, you guys should see that we had to hedge our current long positions using SQQQ and SPXS, and that was pretty on point, especially after a day like today. And I even told my members last night that based on the futures price action, I wouldn't be surprised if tomorrow, which is today, we close red on all markets, and that's exactly what we did. And so why or how did I first perceive that we would be seeing a potential move lower as we head into the first day and first trading day of Q4? Well, the first thing that I want to tell you guys is that I gave a lot more detailed reasons in this week's CFO Swinger Watch report. So if you guys want access to that and become readers, definitely hit me up on Instagram at ChartsFocus1. Again, my handle is at ChartsFocus1, as it is with every other social media platform that I have, like Twitter or X, and well, YouTube and Facebook. Okay, so oh, actually, let me go over and look at the chat here. Excited, awesome. Do nothing. You said, how's the market faring with this Iran missile news? And hey, Defunct, what's up? You've been on point, fam, especially with the hedges. Hey, thank you so much. Thank you, and amazing job with that Queb trade as well for China. But yeah, I'll go ahead and answer your question. Do nothing a little later, but. With that being said, guys, hey, welcome. I just began. I'm about to give you guys the reasons why I was able to kind of see why that we needed to hedge our long-term positions mid last week. Okay, so first of all, again, just as a quick summary of what I just said a couple of seconds ago, if you guys want to know the exact detailed reasons why I chose to hedge mid last week, make sure you guys become a reader of the CFO Swinger Watch report. You guys will also gain access and become a member of the private CFO Discord. Does that make sense, guys? Okay, so basically from a technical perspective, this is the first thing that I noticed last week. Okay, so if you take a look at my markets watch list here that I've shared with everyone multiple times in the private and public CFO Discord channel, I took a look at the equal weighted ETFs, right? All the equal weighted ETFs. Okay, so I looked at the RSP, which is the S&P 500 equal weight ETF, the RSPT, which is the S&P 500 equal weighted technology ETF, and then the QQQE, which is the NASDAQ 100 equal weighted index shares, and then EQAL, which is the Russell 1000 equal weighted ETF. Okay, so what I saw here, okay, there are different different signals from different equal weighted ETFs here, but there's one major commonality across all these 4 tickers, right? They were slowly losing volume as we head up higher, and we weren't making much of any progress to the upside, right? On the other hand, we saw the overall markets like the S&P 500 ETF, right, SPY, continuously chugging up higher, but with very, very slow and very low volatility, right? Even though we're making new all-time highs, which is great. That's a great sign, obviously. But based on the S&P 500 and the divergence between the S&P 500 ETF and NASDAQ, right? I also I highlighted this a couple of weeks ago too, that the overall market breadth, or just the overall breadth specifically for NASDAQ, was completely lagging behind even the Russell 2000 and the S&P 500. But what I was most surprised about was the Russell 2000. And so that to me told me that, hey, things a little bit awry here, right? We need to be a little bit cautious here, even though we're seeing a nice jump up higher from September's lows. And the only thing that I saw truly was that NASDAQ was actually lagging behind the S&P 500. So that kind of made me scratch my head. And so that's the reason why I take a look at all of these 4 major equally weighted ETFs. And I was like, something is a bit off here. We're seeing lower volume. We're still making all-time highs, which is great. But when we take a look at, for example, RSPT today, right, the equal weight technology ETF, massive move down, over 2%, right, to close on the day. And so with RSPT and QQQE both looking pretty bearish at the close here, it leads me to believe that since NASDAQ was initially lagging behind the likes of Russell 2000, which again tends to be known as the crappy index, or a crappy index, one of the crappy indices, it kind of lets me know that such a leader is lagging. Clearly indicates to me that we need to be protecting our long-term positions. And so that's one major reason why, initial reason why last week we took those SPXS and SQQQ calls as our hedge for our long-term positions. Now, here is the thing that you guys need to be looking at and hearing me out for the rest of this week and possibly into the end of October. Okay, so first of all, do nothing. Let me actually address your question there with the Iran missile news today. So geopolitical tensions are actually rising once again. And we've actually have the Iranian government, I believe they officially announced war with Israel. So the overall Middle East conflict is expanding. Now here's the thing. As you guys already know, in the past, I've already told you guys when we had these big instances of potential World War III or just the expansion of Middle East conflict, I told you guys this is a buying opportunity, right? And that was due to the fact that mostly the fact that FinTwit was already very bearish. But this time around, I'm seeing something radically different. So instead of seeing FinTwit being absolutely bearish, I'm actually seeing FinTwit saying, hey, this is a buying opportunity. Today's dip is very much a buying opportunity. And as you guys already know, I am a contrarian momentum swing trader, right? I want to look at, when it matters, look at specific situation and take a look at what the majority are saying and do the exact opposite. And so in this case, with it seems like an escalation is literally on our hands now in the Middle East, and most of FinTwit saying, hey, remember guys that this is a buy opportunity because the markets love conflict and we want to buy the dips during an expansion of conflict, especially in the Middle East with all these geopolitical tension rising. That leads me to believe that, hey, maybe this time around we should be looking at the exact opposite. Rather than trying to buy the dip, we need to protect our portfolios. And so today made me even more confirmed on my own bias that we should be seeing a few more trading weeks, or even maybe even days, just days. Let's try not to be too pessimistic here. That we should be seeing more offloading from long-term investors and even short to mid-term traders as they focus on waiting and sitting on their hands to see how this Middle East escalation dies down possibly, and how the markets will behave in the next couple of days. And so for the short to mid-term guys, here is where you need to absolutely listen in now, okay? Make sure you guys write your notes, all right? You need to understand that in the next couple of trading days, it's going to be most likely a risk-off environment. And so if you guys have not hit any new positions yet for hedges, right? Specifically hedge positions where you guys are willing to have that as insurance against your long-term positions, you need to know that in the next couple of days or even tomorrow, you need to have a hedge position, right? Obviously, this is not financial advice, but based on what the technicals are telling me, we need to be focusing day by day as to what the markets are doing. Does that make sense, guys? Please let me know by either liking the live stream down below or by reacting in the chat room. Whatever works for you guys. Okay. Okay, I see some emojis coming in. Awesome, awesome, awesome. Give me some more reactions there, guys. Just for extra confirmation that you guys are understanding what I'm saying. Okay. Hey, there we go. There we go. Perfect. And guys who are just coming in right now, I just began talking about why we took those hedges at a perfect time it was early to mid last week. So make sure you guys watch the replay. But then again, I've always said that for my live streams, if you guys missed it, or if you guys are coming in, in the middle of the live, make sure you guys watch the replay. I always highly recommend you guys to do that. And the funk, thank you, Fire Live, thank you. So I'm always getting that support from you, so it's amazing to see, man. So with all these equally weighted ETFs moving lower today and closing lower, I am, again, short-term to mid-term bearish in the sense that I'm expecting at least a 3 to 5% move down, in the range of a 3 to 5% move down from the current all-time highs. For example, for SPY, we have an all-time high price print of 574.71 that we hit last Thursday. And if we were to go for, let's say, for example, a maximum 5% pullback from this current all-time high, that would lead us to around at least 544, right? But if you were to extend that move lower, since the market is not exactly perfect or ideal, or it moves in the way that I would want it to move, I would say a good range to be looking at will be 544 to 542.50. However, it wouldn't hurt if we do revisit, okay, the September lows, right? It wouldn't hurt to revisit the September lows so that we can even, I guess, confirm even more or solidify this pivot that we saw from 540 to around 542.50 as a new area of demand. It's a very tight area, but nonetheless it's a very good demand area that we saw coming in. And obviously we have a nice large pivot that we saw on September 11th here. So again, a 5% pullback from here maximum wouldn't be bad. Also, a revisit at the September lows would also not be bad as well. From a technical perspective, it will set us up for a lot more upside room into the end of the year, and possibly my absolutely insane call out that I made about 2 weeks ago of the S&P 500 or SPY hitting $600. Right? Hopefully you guys remember that. I have a couple of videos recently that I've uploaded that you guys should watch on why I believe that the S&P 500 ETF can reach $600, or the S&P 500 index, or ticker symbol SPX, can hit 6,000. All right, so make sure you guys watch those videos. It is on my channel, so all you need to do is head to my channel after this stream. Okay, so what about a 3% pullback, right? What about 3% pullback? Okay, so that should bring us to around this whole number level of $555, which is a nice daily level of support that we formed. Again, there was a significant level of daily support that we formed back in late August before we saw that early September sell-off. And so I've explained this in the most recent private but now public CFO Swing Watch technical analysis video, which you guys can find down below in the description box. It is the very first link that you guys should be able to see in the description box down below. Okay, so make sure you guys watch that. All right, so I explained this very thoroughly as the reasons why a 3% technical pullback would work out really well and would set us up for a nice quote-unquote dip buy, a very tame dip buy, or from a tame pullback to a very small quote-unquote dip buy in early to mid-October, where it can provide us with a nice potential positive, a very, very positive month of October. And I've actually discussed this as well in my CFO Swing Watch report this week as the reasons why we could potentially see a positive month of October. But then again, you guys need to become readers to be able to read that report. All right, so now you guys might be scratching your heads. Andrew, are you saying a negative month of October or a positive month of October? I don't know. I'm not a fortune teller. I am taking this day by day, and in order to lessen the amount of stress of trying to look at things from a day-by-day perspective on the overall markets, which can be very stressful since we need to take into account of other news, macro news, and geopolitical tension, and a plethora of other issues and catalysts that can affect the market. We are hedged. That was another major, I guess, emotional and sentiment reasons why we decided to hedge early to mid last week. So ideally I would want to see the first couple of days of October pulling back. And so tomorrow, I would love to see a continuation to the downside unless we kind of chop around and end up with a nice doji candlestick. But from a technical perspective, I want to see a quick and a lower move to the downside in the early days of this month. Why? Well, here is the reason why. Okay, so make sure you guys listen in closely again. In the past 2 months of August and September, what did we see, guys? What did we see? In the first couple of days of August and September, we saw a rather rapid move down in the markets. And then in the next couple of trading days after, when we hit a major level of support or a major area of demand, we saw an extreme pivot as we saw buyers coming in to defend that support level or support area or demand area. And so just from a quote-unquote historical perspective, obviously 2 months ago is not or 2 months ago or even a month ago is not that far away. Just from an average standpoint or perspective, if we have this pattern forming of when the early first few trading days of each single month so far becomes weak, then we can see the first couple of trading days in October to perform in the very same and similar manner. I'm not saying it's going to be the same exact tandem price action, but rather a very weak couple of first trading days in the month of October. Okay, that kind of rhymed. So just from from a gut feeling, I would say the very first week of October is going to be weak, definitely for sure, and then possibly into early to mid next week again, and possibly from early to mid next week, we can see some sort of a bottom forming on the overall market, and that could be potentially maybe around 555. Or maybe around 544, or maybe even around September's lows. And I've given you guys that kind of a long list there because it depends on whether or not we hit a 3% pullback from current highs, or 5% pullback from current highs, or we just try to revisit September's lows from the current all-time high price print. Does that make sense, guys? Make sure you guys smash that like button down below to really let me know if you guys are really understanding what I'm saying here, and if you guys are planning to apply what I've told you guys here tonight. Alright, I see you guys' emojis coming in. Flying up. Awesome. So again, guys, I have given everyone a chance to take a look at the then private but now public CFO Swing Watch report technical analysis video, which is already uploaded on this channel. It's the very first video that's been uploaded on this channel, and you guys should really watch the very first couple of minutes where I talk about the S&P 500 and what I would want to see in this week, in this new upcoming trading week, which is again this week. And it's been on point, for example, like today, where the hedges worked out perfectly that we again executed early to mid last week. And it was great to have these hedges because personally for me, my portfolio ended flat, which is exactly what you want to see, either flat or very, very small red on the day. And that's the entire point of these hedges against my long-term positions. Does that make sense, guys? It's insurance that can become very useful, but at the same time, you do not want it to become very useful, or you do not want to use it in a long-term perspective because you're using it to hedge against your long-term positions that you're heavily invested in, right? So again, the S&P 500 3 to 5% pullback is possible in the very first few trading days of October, and possibly into early to mid next week. We can see, depending on how the markets perform this trading week, we can be seeing a bottom forming, whether or not we hit the lows of September, or a 3% low of 555 from all-time highs, or a 544 hit from all-time highs, which is a negative 5% pullback. Whatever it is, whichever one it is, I want to see a nice pivot coming in into the second week of October, because that's exactly what we saw in August, and that's what we saw in September. And so from an average quote-unquote historical standpoint, all right, it makes sense that we could be possibly seeing a quote-unquote rhyming pattern here, where we have early weakness into the month, and then we end up being positive to close out the month at the end. And based on other reasons and other data points, again, data points that I've outlined in this week's CFO Swing Watch report, we can potentially end up being positive for the month of October, believe it or not, even if we have election catalysts coming up on November 5th. Even if we have those catalysts, okay, or if you want to say catalyst, election catalyst. So, you know, there's also that ridiculous possibility too that, hey, we can potentially hit 600 before the November elections on November 5th. Who knows? All right, all I'm telling you guys that I don't predict the future. I can't predict the future, but what I can do is remove myself from all the stress and headaches that I could potentially have by being too directionally biased on my portfolio, or in my portfolio with my current list of positions. And so that is the reason why, one of the major reasons why early to mid last week, we took those SPXS calls and SQQQ calls to set, execute, and to forget about it. And so far, it is paying off, especially on a day like today. I was completely stress-free. My account ended up being slightly red, but basically didn't go anywhere, right? It's basically flat. Yes, slightly red, but it's just a color, right? That's one of the few things I'd love to say, right? You know, if you end with a small green with your hedges, right? Thanks to your hedges, great. If you end up being slightly red or just basically flat, doesn't matter if you're slightly red or green, which is basically flat, that's exactly where you want to be, ideal, right? So again, these hedges are to help you emotionally and mentally so that you guys do not make rash decisions when the market becomes very volatile. Now, last but not least, what else can you do when the equity markets are showing a bit of volatility? Like today, we saw the VIX pumping up higher and even hitting that value of 20, which isn't good. Right, that's not good. That usually indicates that we have a potential correction to the downside in the next couple of 30 days. Right, I believe the official textbook percentage move down is negative 5.77 if I'm not mistaken. Yeah, so, you know, with the VIX hitting a value of 20 today, it's not looking too good, right? I mean, obviously, we could possibly just be simply making another lower high on the VIX, which would be great, right? It makes sense. These are the August lows right here, and these are the September lows, and possibly we can be making an October low, which could, again, potentially and ideally come in early to mid next week. So mark your calendars and remember that, and make sure you guys are staying hedged. So based on this VIX pump, what else can you guys do? Right? What else can you guys do with your portfolios? Well, invest in bonds. So bonds have come down from its highs from, I think it's like almost a 2% move down, almost a 3% move down from today's close, like literally a 3% move right here, exactly. Okay, so TLT, right? This is the Treasury 20 plus year Treasury bond ETF, or you guys can take a look at the shorter term like IEF, which is the 3 to 7 year Treasury, excuse me, not 3 year, that's the IEI. IEF is the 7 to 10 year Treasury bond ETF, or you guys can take a look at the even more shorter term Treasury bond ETF, the 3 to 7 year Treasury bond ETF, right, IEI. And so these have all risen from its yearly lows of this year, right, this fiscal year's lows, and they have started to begin their own consolidation phases, like we see here in IEI, IEF, and TLT. Now, why do I think that you guys could be longing these bonds, these Treasury bond ETFs right now when the equity markets are potentially facing a short-term correction? Well, again, they have pulled back from their recent highs, right, the momentum highs, and they're starting to begin their consolidation phases. But at the same time, when we tend to see a rate cycle, right, rate cut cycle, a cutting cycle coming from the Fed, bond markets do really well, and they tend to do really well whether or not the equity markets are doing well, right? So they kind of become a diverging area of the market, the bonds market, from the overall equity markets. So they diverge from what the equity markets are doing. And we've seen that happening for the past couple of months. I've noted this as well for you guys in the past couple of months as well. So hopefully you guys remember this. And so that still remains the case. So again, we're still within sights of a potential rate cut cycle. Well, we do know that the overall Federal Reserve is wanting to continue to cut rates into the last two FOMC meetings that we have left of this year, November and December. So this is yet another way to quote-unquote hedge against overall equity market volatility and a potential short-term to mid-term correction to the downside by longing bonds. Does this make sense, guys? Okay, so for all the CFO Swing Watch report readers and the private CFO Discord members, I will be sending out a trade on TLT or even IEF or IEI tomorrow, because it seems like we're at a very, very good technical point to get in at these current higher lows that we see on TLT, IEI, okay, and IEF. Does this make sense, guys? All right. Okay, so that is my entire general plan that I have for you guys, that I want to provide for you guys. But then again, if you guys want to know the exact data points that I've given out to my CFO Swing and Watch Report members, readers, and the private CFO Discord members, again, you guys will become those private CFO Discord members once you become a reader of the CFO Swing and Watch Report. Make sure you guys DM me on Instagram at ChartsFocus1 to receive your first 30 days as a 50% discount. Okay, at a 50% discount. Again, you guys can receive your first 30 days of your subscription at a 50% discount. So make sure you guys don't waste this opportunity. Okay, all right. So again, guys, I provide so much information, so much data, relevant data, mind you, and most importantly, applicable insight into the markets of what you guys can be doing every single trading week in each CFO Swing and Watch report. That also comes with the private CFO Swing and Watch report technical analysis video. Okay, and if you guys want to take a look at the private but not public CFO Swing and Watch report technical analysis video, make sure you guys take a look down below in the description box and click on the very first link that is shown in the description box. Okay, I'm talking very slowly so that you guys understand. All right, so that is it for me tonight, guys. If you guys want to hedge, make sure you guys are taking a look at SQQQ and SPXS, just like what we did, what we personally did early to mid last week. And also, if you guys want to, take a look at SPY or QQQ puts as a way to hedge as well. That's completely fine too. But again, my message is the same here. Whichever you guys want to choose to execute your hedge positions, make sure you guys understand that there is a period of volatility that we can be experiencing for the first couple of trading days into this month of October and into the very first trading sessions of Q4. And based on how we move and close this week, and based on how we potentially pivot early to mid next week, we can be setting up for a potential positive month of October, believe it or not. And I have provided all of those data points as to the reasons why I could potentially see that happening in the official CFO Swing and Watch report for this week. So again, if you guys want to become readers of this report and simultaneously become a member, a private member of the CFO Discord, make sure you guys DM me on Instagram at ChartsFocus1 so that you guys can get your first 30 days off, 50% off for your first 30 days. And you guys can see what we're doing and how we are managing our swing positions, our current swing positions, and potentially new and upcoming swing trade ideas that we have in the private CFO Discord. Okay, so again, you guys can get 50% off for your first 30 days of becoming a reader of the CFO Swing and Watch report and becoming a private member of the CFO Discord chat room. Hey Ray, what's up? Thank you. That's a huge compliment. Thank you so much. All right, so that concludes my time here for the stream tonight. Hopefully you guys have understood and comprehended everything that I've said, right? Or comprehend everything that I said here. And if you guys have any questions, again, make sure you guys DM me on Instagram with those questions. I'm happily to answer them to the best of my ability. With that, I'll see you guys on Thursday night at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Have a great rest of your night. Good luck tomorrow, and thank you so much for watching.